Hey guys, welcome. Today we're going to talk about the revolutionary Israeli 3D printing company Nano Dimension and star investor Cathie Wood. Let's not waste our time, and let's get right into the details from the stock that rose about 80% in value in just 2 weeks. Before that, we need to know a little bit about Cathie Wood to see why people take her words so seriously. Hit the like button and make sure that it turns blue to see that you are ready, and subscribe. Let's start. The rapid rise of Nano Dimension, this once unknown Israeli tech company, and skyrocketing asset management firm Ark Investment. CEO Cathie Wood was born in 1955 and graduated summa cum laude in 1981 from the University of Southern California with a bachelor's in economics and finance. After she graduated from USC, Cathie Wood went on to work as the chief economist at Jennifer Associates for 18 years, co-founded her own hedge fund called Tupelo Capital Management, and served for 12 years as the Chief Investment Officer of Global Thematic Strategies at AllianceBernstein. In 2014, Cathie Wood founded Ark Investment Management LLC, and it's absolutely insane how respected and influential she became. It's Cathie Wood who helped convince Elon Musk to keep Tesla public in 2018 when he tweeted, "Am considering taking Tesla private at $420. Wood called that Tesla would hit a valuation of $4,000 within 5 years. It hit it in 3. But Wood rose to worldwide prominence in the field of finance in 2020 when, as most investors were fighting for their lives, Ark, under Wood's leadership, experienced returns far surpassing 100%. Ark even dethroned JP Morgan last year, becoming the world's largest active ETF, and it had only been around for 6 years at that point. According to Ark's website, the firm focuses on combining top-down and bottom-up research, and focuses on disruptive companies that are doing something innovative in an otherwise all-too-monotonous industry. Within Ark Investment, there are several ETFs, or exchange-traded funds, each of which focuses on something slightly different. However, today we're going to be focusing on the ARK-W Next Generation Internet ETF and the ARK-Q Autonomous Technology and Robotics ETF. It's these two ETFs that invested heavily in a stock that was widely considered a penny stock at the time. That stock, of course, is Nano Dimension, ticker symbol NNDM. NNDM is an Israeli company that's quickly becoming a leader in the 3D printing game. I will tell you my opinion in just a couple of minutes whether you should buy or sell NNDM. NNDM uses 3D printing to help other businesses manufacture drones, cars, satellites, smartphones, and even some medical devices. Basically, NNDM's goal is to bridge the gap between PCBs and semiconductor integrated circuits. I'm not an engineer, but in short, NNDM is all about fulfilling the need for more reliable and faster 3D printing. NNDM represents an industry which by NNDM CEO's estimation is currently worth $65 billion, 85% of which exists in the Far East. They have 30 more machines in the United States, and 30 more spread across 4 continents. NNDM is what's known as a story stock. Much like its name implies, a story stock is a stock that investors believe in, not because of any fundamentals like their price-earnings ratio, level of debt, volume traded, etc., but because they just plain old believe in the company's future. Most of that belief was triggered by Cathie Wood and Ark's ETFs ARK-W and ARK-Q. ARK-W and ARK-Q both invested heavily in NNDM. ARK-Q currently has a 3% of its portfolio in NNDM, making it the 10th biggest investment in ARK-Q, and ARK-W currently has a 0.85% of its portfolio in NNDM, making it the 52nd biggest position. The reason 2 different ETFs run by the same firm invest such wildly different amounts in the same stock is because the 2 ETFs are focused on 2 different things. Remember, ARK-W is geared towards next-generation internet stocks, aka companies focused more on specifically internet-based business models, whereas ARK-Q is focused on autonomous technology and robotics, which is much more relevant to NNDM. But still, the fact that both ETFs are invested in NNDM shows that Ark sees the wide array of potential uses for the 3D printing technology that NNDM offers, and investors took notice. After news broke that Cathie Wood had her eyes set on NNDM around October 2020, the stock price shot up 70% in less than a month. As news that Cathie Wood kept investing more and more in NNDM, the stock kept rising in value. Eventually, by mid-January, NNDM reached over $16 a share, up from less than $1.50 in late September. Ark weren't the only ones who found value in NNDM. Seeking Alpha, in December 2020, said that NNDM had the potential to disrupt the printed circuit board, or PCB industry, although they did admit that it was a rather risky investment. NNDM stock was so volatile in January that trading actually had to be halted at several points. This is partly due to the overwhelmingly polarized investor sentiment. Some see NNDM as the future of all things tech, while others see it as an overly bloated penny stock gone awry. But also due to the fact that NNDM spent 2020 really capitalizing on its newfound attention, doing multiple share offerings to raise more capital. In just 1 year, NNDM's market capitalization, which is the total value of a company's shares measured by the share price times the amount of shares currently sold, was up by about 35,600%. NNDM continued its surge, albeit at a much slower pace, through early February, although the stock price did fall a bit as part of a wider market dip caused in part by the uncertainty brought about by the whole r/Wall Street bets and GameStop saga. After the turbulence of that week, however, the pace picked back up and NNDM slowly began to rise again. So what does the future hold for Nano Dimension? Well, as of right now it seems pretty optimistic. Ark keeps buying more NNDM, even as the stock continues to break ceilings, implying that they think the price target is actually higher than its current levels. Some investors are concerned, however, that despite all the hype and all the potential, Nano Dimension is actually not at all that profitable at the moment. While they're great at raising capital through stock offerings, the earnings per share for those who own NNDM is actually negative 1.48, meaning that NNDM doesn't actually make money through its normal operations, but rather through financing and stock offerings. It might be for this reason that several forecasters such as CNN Money expect the stock price to go down, while others, such as Wallet Investor, expect NNDM value to keep rising. What I think is that NNDM is a good buy. It is currently making money, hence the negative earnings per share, but that's just because it's a relatively new company in a relatively new industry. NNDM are still masters at financing, leading them to have an enterprise value/revenue of $191.02. Cathie Wood is famous for her ability to pick out winning stocks from companies that are changing the game, and I think she's right on the money with this one. Of course, it's somewhat risky stock since NNDM is still in many ways a startup, but the signs are all there. 6.5% of their stock is held by institutions according to Yahoo Finance, meaning that it isn't just Ark. Lots of funds think that NNDM is a good buy. Also, NNDM's CapEx, capital expenditures, aka the money that businesses have on hand to spend on machinery, expansion, etc., has been growing year over year. And in 2019, the most recent year for which the data was available, they grew over 50%. It's clear that NNDM really capitalized on the newfound popularity and used it to infuse themselves with a ton of cash that they need for their daily operations. They're revolutionizing the 3D printing game, and that's why I'm confident they're a good buy. But what do all of you think? Is NNDM a solid bet, or is it just too early to tell? Let me know in the comments section down below. So guys, that's basically it. That's the story of how one widely respected investor turned a penny stock into one of the hottest tech stocks in the market, and why investors seem to either think it's the next best thing, or an extremely overweight penny stock propped up on rather thin fundamentals. If you like what you saw, remember to smash that like button, and subscribe and turn on the notifications so you don't miss out on more videos. Check out CCIV Loses Motors here, and I'll see you in the next video. Take care.